Welcome back to TyNance, another week in the stock market. 9 of my stock holdings reported quarterly results. I will be going over each of them. But first off, let's get into the results. My portfolio is back up to $113,429 after market started recovering this week. Okay, so 9 of the companies I hold reported quarterly earnings this week, which is a lot, especially if you're not doing this full time. I need to research all quarterly earnings reports. Usually, I like to watch the webcasts of the conference call of the companies, or I will read the transcript of the conference call. And if 9 companies post earnings in 1 week, which is almost 2 a day, then it is really hard to keep up with all of them. But I was able to go through all the earning reports. And since there are 9, I won't be going in full detail on all earnings reports. I did lay out all the income statements so that you can see the revenue and the income statement when I'm talking about the stock in front of you. So please go ahead, do some more research in the numbers if you'd like, but I will not just be going through the numbers itself. Maybe for a bit, but I will, or the thing I will do most is talking about the quarterly earnings report of each company, what I think of them, and what I will be doing with my position. Okay, so first off, let's dive into Palantir, which was the first one to report Monday after hours. Just to give one example, I had Palantir, Hims and Hers, and Mercado Libre all reporting after hours on Monday, which is quite crazy to start the week. So it was kind of exciting, but I showed you already that my portfolio is back at an all-time high. So you can consider the earnings this week have gone quite well. Now let's dive into the first one, Palantir. Palantir was expected to um, to see revenue growth of 39%, and eventually they came out with, or this earning report, they came out with 48% revenue growth. So very well done by Palantir. They beat all the expectations of analysts, and they even raised their guidance. So things could not get any better for Palantir. But that is also visible in the stock price. It already was, but now the stock price surpassed $180. And if you watched my previous videos, you can know that I sold a call contract on Palantir, which will expire next Friday. So if Palantir stays above $175, I will finally have to sell my shares. I hold 100 shares. It's my largest position, and I will have to sell my 100 shares for $175 each. Do I mind? No, not really, as this company has done a lot for me. It's up 1,700% already, my position. But the valuation is so high that each time I look at the position, I feel like I just need to hope that the valuation becomes even more aggressive, and that's not how I want to invest. I do not want to fall in love with companies, so to say, or with a name. So I think it's a really good moment to sell. Maybe in all the hype, and if they keep on going, the company will go to $300 in the short term. But that's just hoping it goes there if I would hold on to stock right now. So I'd rather sell out of my position and move my money elsewhere. But Palantir was my biggest gainer so far in all the companies I held. So I'm definitely glad I started the position in Palantir, and it's still an amazing company. So if any opportunity arises, I will probably step back into the stock, but not now. Maybe when the valuation comes down, if we see a bear market or some correction in the stock itself. Next up, we have Hims and Hers. Hims and Hers stock dropped about 20% this week after reporting their quarterly earnings report. They saw a decline in revenue quarter over quarter as they are facing some near-term headwinds. But I am not too worried as they expected this already. And I believe that soon, maybe this year, and if not this year, then it will be next year, they will be able to launch new product categories, which will create new verticals for the company to grow. And they are still growing above 70% year over year. So I'm not too worried about a decline in revenue for one quarter. So I will be holding onto my shares as the stock is still at $52 and I bought my shares at $8. This doesn't mean I would not like to increase my average, because you should always think about increasing your average buy price if the stock is still undervalued or if you think it's still a good deal. But for now, as the company is not growing quarter over quarter, I see no reason to buy more of Hims and Hers, as well as this is already quite a size, a big position for my portfolio. Then we have Mercado Libre. Mercado Libre stock was down a few percent this week after their quarterly earnings report. The stock is still growing, or the company is still growing revenues at about 30%, which is a lot for such a large company. Now bringing in almost 6 billion in revenues in one quarter. So why did the stock trade down on such amazing revenue growth? Well, it seems like every other quarter, Mercado Libre finds a way to invest more money to expand the business, which should be very good for a return on invested capital in the long run. But analysts then talk the stock down because it seems like the margins of Mercado Libre are going down, which is definitely not caused by external factors, but by Mercado Libre itself. So Mercado Libre chooses to reduce or at least in the near term reduce their margins as they invest or reinvest a lot back into the business, so that they are able to grow the business at a pace they've done all those years. So I don't think there's any wrong with that, and I actually like the fact that they are reinvesting so much into the business, which is also showing in the stock price over the years. So I will hold on to my one pathetic little share of Mercado Libre, because this stock is still about $2,400 a share. So it's not easy to get a lot of shares in this company, especially not if you are a small retail investor. Then we have AMD. AMD stock dropped about 10% after their quarterly earnings report, but they almost fully recovered this week. AMD ran up a lot going into earnings, so it's not strange to see a small correction. The revenues of AMD are over 33%, which is amazing, of course, but as this company is always being compared to Nvidia, it's apparently not enough to get the stock going to 200, at least not for now or right away after their earnings report. But they will be selling their new data center chips, the MI350. I expect a lot from those, as they should be able to compete more with the Nvidia chips. And if they are able to do so, then I think I will gladly hold on to my shares. which I have 40 of now, so I will hold on to my 40 AMD shares for now, and I will gladly buy more if it drops underneath $150 a share. Next up, we have Shopify. Shopify was up about 20% after their earning report. So Shopify was able to show growth of 30%. It seems that revenue growth is accelerating for this company. I hold 50 shares and I am now up over 100%. I gladly hold on to my Shopify shares, and I wish I could buy more when the stock price was lower. But now the stock price is back almost at all-time highs, and I think it can go there shortly. But the valuation is getting up there, of course. So I will just hold on to my 50 shares for now. But if I see some other good opportunities and I think the valuation is too high, then maybe I will sell out of Shopify in the near term. We also had OSCR reporting earnings this week. They already reported preliminary earnings and guidance before, so this report was to be expected, and the stock was up over 10%. So some of the uncertainties faded after they came out with their official earnings report. I will not be buying more OSCR shares, probably above $15, but if it falls back underneath $15, I do want to buy more OSCR held shares. And of course, don't forget, I also own five put contracts, sold put contracts on this company at a strike of 12 for December. So my exposure to OSCR is already about $6,000 for those put contracts. Then we had ELF reporting earnings. The stock dropped about 10% after their earnings report. They need to integrate the new Rode brand into their own company, and they are facing a lot of headwinds still, which are tariff related, as they are producing a lot of their products in China. So that's also why they did not provide guidance, which could be the reason the stock sold off. But I am not too worried about the long-term trajectory of ELF, and I will be holding on to my shares if the stock dips below $90, maybe even 100. I will increase my position. We also had Celsius reporting earnings. The stock was up about 20% this week. Their revenue numbers seem kind of inflated, as the revenue growth was about 84% year over year, and this is mostly because of the deal that was finalized between Celsius and Alani Nu, another fast-growing energy drink brand. But the Celsius brand itself grew, and they were able to take market share again, which shows resilience in this business of Celsius, and now the combined business of Celsius and Alani, which truly makes them the third player in the energy drink category after Red Bull and Monster. So as a combined company, they will probably have a bigger chance to compete against Red Bull and Monster. So there's a lot of opportunity in this company. I won't be buying more, as I already hold 100 shares, which is quite a big position for a company that still has some risk, as they are not the biggest company in the space, of course. But I do see a lot of opportunity in this company, especially now that they have integrated the Alani Nu brand. So I will hold on to my position for now. Then last, we had FUBO reporting earnings. The numbers are not that exciting. They do get closer to profitability, but for FUBO, it's all about finalizing the deal between FUBO and Hulu. So as long as the deal is still pending, The numbers matter less than they would usually do. I do hope to see the deal get finalized soon. Now that we've gone over the quarterly earnings, let's have a brief look at my portfolio. I added 5 shares to my United Health position, going from 15 shares to now 20 shares. I am down 4% on this position. This stock was absolutely obliterated, going from over 600 at the top to about $240 at the low. But I stated before that I think the stock is punished too harshly, and I would not be surprised to see a bounce, especially if no black swan comes up for this stock. Um, Next to United Health, I did not make any changes to the portfolio this week. Now let's have a look at my option contracts. First off, I closed the call that I sold on SoFi Technologies. I got a $35 gain out of that. This week I started a position by selling a put in Zeta Global, a company I did not trade in before. I sold the put right before earnings, and after earnings the stock went up 30%, so I was able to close the position for a $75 gain 1 day later. Then I also opened 3 extra calls on FUBO with a strike of 9, which is quite high, and an expiration date of 21st of November 2025. Why did I buy 3 extra calls? Well, I believe that the deal between Hulu and FUBO can be approved soon, and at the latest in the fourth quarter. But I can be wrong, and maybe the deal between Hulu and FUBO is only approved next year, or it's even denied. Then that means that my calls will expire wordless, but it's only a $40 position, so this is kind of a fun gamble to me, but not something I would do a lot. It's just because of the deal and the timing, so I'm trying to time the market, which is not really my style. That's it for today. Note that this is not financial advice. You can find the full disclaimer in the description. Please like, subscribe, and thank you for watching.